I am Dave Henning with Fresh Start Podcast, fresh ideas for business and personal growth. And today I'm very excited to have my special guest with me, Mr. Charles Reed. Charles is a CPA and U.S. tax court practitioner, my kind of guy. I could have used you a few years ago when I got audited 3 times, but it's all good. It's all good. You're on the Internal Revenue Service Advisory Council. And you are the founder of GetPayroll in the Dallas area, and you are the author of the Payroll Book, available on Amazon, and we'll talk about that further. And so you do all kinds of stuff, payroll services, tax services, and since 1991. So welcome. Thank you for being with me.
Dave, it's a pleasure to be here. Thanks for having me.
Now, you're an accomplished senior executive. You're an entrepreneur with more than 50 years of financial leadership. You're just a kid. I think I graduated from high school. I tried to graduate about 50 years ago.
More than that for me now.
Entrepreneur, author of 4 books. Very good. And your book now is number 25 on Amazon. Let's talk about what in the world is going on. We've had an incredibly, as you know, everybody knows this, crazy year last year. Businesses going under, going out, getting loans, getting grants. What do we need to know this year, 2021, the COVID tax provisions, and how in the world do you know what you've got going on and how to use them?
Well, that's why you hire a professional, but most of them have semi-expired. The one that still remains is the for the employer retention credit, where you can literally get paid for having people not work. If you've had to, if they're at home not working and you're paying them, then you can get a credit for their entire payroll. So that's still in existence and runs for another few months. You can also take it back to last year. So if you paid anybody because of COVID not to work, including the wife and kids, if you paid them, then you can get a tax credit for all of that. And that's the important thing at the moment. The PPP is gone. The deferral is gone. A number of the other provisions have sunsetted out, but there'll be more. The tax laws and the employment taxes are changing. The things and recommendations in Congress now could be overwhelming. It's crazy. It's a crazy time. Labor laws have changed. Provisions for independent contractor identification that had been put together and vetted and proposed and put into place by the Trump administration that were supposed to take effect were thrown out by the Biden administration. So that's all up in the air. Tax laws are changing. So you got to keep on top of things because the changes have not stopped and they're not going to apparently. 75% of the U.S. revenue goes through payroll. So whenever Congress wants to change revenue streams, they change payroll rules.
Oh, man. That's in addition to the typical annual changes anyway, that usually there's always something going on. And now, for example, I think we have already passed the original extension from April 15th for regular filing. And of course, I file an extension every year till October 15th. What are people doing nowadays in regard to the extension or whatever else they can do?
Well, except in Texas, we're extended until June 17th.
Oh,
because of the major freeze and power outages we had, they extended Texas and Texas individuals and corporations until June. So you got to keep on top of this stuff. But yeah, basically, it's the never-ending tax season this year. It's still not over for 8% of the population that lives in Texas. And so you've extended it. I filed some extensions yesterday, a couple of them. Others we'd gotten done and filed my last of the returns. So yeah, now it's delayed until October. Now, some of the corporation returns and partnership returns, if you didn't file the extension by the original due date, may not be effective. That's still up in the air.
Oh my goodness.
Because remember, it takes sometimes years for the IRS to write all the regulations and guidance for congressional laws. The Tax Act that was passed in December of 17, the Trump tax reduction, the final guidance on everything still isn't written after 3.5 years. Okay,
Wow.
most of it is.
Yeah.
But there's some pieces that are still up in the air that we don't know what's going to happen. And then the appropriations bill that came through the other day supposedly changed entertainment back to for meals from 50 to 100%, to boost restaurants and this kind of thing. So, I don't even have the guidance on that yet. I've just heard about it. So these things change constantly. So you got to stay on top of it or use somebody. I get 5 emails a week, newsletters from the IRS on different things, 5 every week. This is my life. So if you're a business person and you've got a company, I don't care what it is, construction, manufacturing, service, restaurant, dog grooming, it doesn't matter. That's where your concentration is. And if you think you can do that and keep up with the payroll laws, you're a better man than I am.
Yeah, it's just got to be overwhelming for business owners. The roller coaster ride. Even in California, the restaurants are closed. No, we changed our minds. Well, they could be open, and we just lost the $2,000 worth of produce that when we closed, and it's just difficult. Let's just keep it positive and just say really difficult. So, is there anything going on? You mentioned the PPP loans, but is there any possibility of the forgiveness portion of that going on yet, or no?
Yeah, that's been basically codified at the federal level that it's forgiven, and the various states are doing it. Texas passed their forgiveness here last week before, in the last 2 weeks. The Texas legislature is in session, and they passed the rule that it wasn't taxable for franchise tax purposes in Texas. So most of the states are doing that. You've got to be on top of that for your state, or talk to your CPA and in your state, and he'll be on top of it. But every state's different. Another thing is unemployment insurance rates. Some of them have gone up 500% because of all the unemployment that was paid out. So things change.
Yeah, very fast, unfortunately. Very interesting and difficult, challenging for sure. Let me ask you, frame this question a little bit differently, because I actually have a friend from church years ago that actually worked for the IRS, and he was actually a nice guy. He wasn't like Darth Vader or anything. And as I mentioned, I've been audited for a couple of minor infractions that actually turned out to my benefit after all. But all that being said, so what happens if I get some kind of an IRS notice? Like right now, I hear these radio ads, like these scare tactic radio ads, like call us, we'll take care of it. So what happens if a corporation, they receive an IRS notice? What are they supposed to do about that?
Well, there's several things to do. First of all is always respond. Respond to every correspondence you get. If you get a letter saying that you owe a penalty, write up the reasons and the arguments why you don't, or why it should be abated. Now, obviously, if you find out, oh shit, I didn't do something, go do it. File the return, make the deposit, whatever, and then ask for abatement on the penalties. But if it's wrong, and like the IRS, 100,000 people, and most of them are nice people. They really are. They're mothers, fathers, brothers, sisters, sons, daughters. They're nice people. But they're working in an organization that is short on budget, which reduces the training. They are civil servants, which means that the greed, drive, profit motive doesn't exist. They get paid the same amount, whether they get the job done today or they get the job done tomorrow. That's civil service. And it's almost impossible to terminate them. So there's very little risk of losing their job. And in many cases, they're dealing with technology, some of which that goes back to the 1960s. Okay? Some mainframe computers that IBM hasn't made in this century. Okay?
Wow. Yes,
so
I get it.
They have problems, and therefore there are millions of mistakes a year that the IRS makes. not necessarily on purpose, but systems, people, paper, handling. When you're manually entering stuff, there's keying mistakes. It happens. It's going to happen. I promise you. So lots of these mistakes, and the IRS issued $13 billion in employment tax penalties in fiscal 19. So a lot of times, and more than half of them got abated because they're wrong. So a lot of times it's incorrect. So you answer it, you follow up, you appeal, you appeal, you appeal, you appeal, and they'll keep telling you where you can appeal, and you keep doing that up to and including tax court if appropriate, or district court. In tax court, 95% of all cases are settled pre-court. They don't like to go to court with them. They might set a precedent that they don't want. So you're going to get a settlement offer in all probability for less than what you might think you owe if you go to tax court. But dealing with the IRS is a whole series of no's followed by a single yes. And once you get that yes, say thank you very much and get the hell out of there. Okay? Don't keep talking.
Right.
Okay.
No, when you keep your mouth shut.
Keep your mouth shut and say thank you and leave. So follow up. That's the big thing. The first letter you write to ask for an abatement of a penalty, you're going to get a no for an answer. Every time. 100%. The first request, I don't care how cogent it is, how detailed it is, how obvious that they made a mistake, you're going to get a form letter saying no, regardless. So, but then they'll tell you the appeals coordinator, their address, you send it to them. About 95% of those get rejected. Then you'll go to appeals. And your chance of appeals are much higher because you're dealing with a more experienced crew that understands this is not collections, okay? Because collections people, the collections people in the IRS are like any collections agency. They don't care whether you owe the money or not in reality. Their job is to collect money that they've been told you owe. They don't care about the underlying situation. They're not required to. They're not supposed to. They're supposed to be collection agents. So if you get into collections, those people don't care. You have to get out of collections and into appeals. You can file certain things like a 12-153, which is a collection due process hearing, which will stop all collection efforts while you wait for the hearing and have the hearing. You can go to tax court. It costs you $60 to file a petition. And if you're broke, they'll waive that. And that will, again, stop all collection efforts. And the first thing that happens when you go to tax court is it gets sent back to docket appeals, and you get another bite at the apple. So that's a valuable thing to be able to do. And the cost is relatively inexpensive. It's one of the reasons I became a U.S. tax court practitioner. And what that means is I can represent my clients in U.S. tax court without being an attorney. And so for our clients, we just do that as a matter of course. To file a tax court petition for one of my clients, my fee to them is the $60 that I have to take out of pocket. Other than that, it's part of the service. Now, I've got to go to court. I'm going to charge them, okay? But that's part of our service. And I went and got that credential because the IRS a number of years ago was getting really obstreperous with these things. And it's another tool that I can use to keep my clients from paying penalties and interest that they should not have to pay.
I'm speaking with Charles Reed, tax professional with the IRS mediation stuff, and thank you for being with me. So I actually, it was kind of an accidental thing that happened where a couple years ago, my taxes got filed like 2 days after the extension, and I did get a penalty fine. And fortunately, I went through the process that you talked about of writing the letter. And, I'm a pretty good copywriter, so, I can kind of expound on flowery, And fortunately, they said, okay, well, in my situation, it was one of these things. Well, you've never done this before in 50 years, so we'll forgive you, blah, 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 and don't do it again.
Go and sin no more, yes.
Yeah, exactly. You talk about the 5 tips to avoid employment, specifically employment tax penalties, and it is so confusing. I have an attorney friend in San Jose, California, and she uh, went to battle for one of my friends who owned a business who had independent contractors. And
Yes.
because of the twisted California laws on that, which were ambiguous, took a whole year of court time to get that settled, that she did not have to have these independent contractors and pay them as employees on her payroll, because she was just kind of a small shop. So address that, the 5 tips to avoid specifically employment tax penalties.
Well, the first thing is to know everything you're supposed to do or hire somebody that does. In other words, know all the registration you have to do, all the forms you have to file, and all the deposits you have to make. Now, the next thing is to make sure that all your numbers are correct. The biggest mistake the IRS gets is arithmetic errors. Make sure everything adds up right, put down right, not transposed, and so on. Make sure that all your deposits are made on time. If you are late, make it immediately to cut the penalty down because it continues to grow. Make sure they're the right amount, okay, that they're exactly what you need it to be. Make sure that your reports you file, you file all your reports and you file them on time and you file them correctly, okay? Everything's
So this is the quarterlies, the quarterly report?
Quarterlies, annuals. In some states, it's monthlies. Deposits may be next day, depending on the size of your business. So you have to know your deposit period. You have to understand when you have to, what the amount you have to make, when you have to make it, what you have to file, and when you have to file it. Those are 4 things. Tie that in with knowing exactly what you need to do in terms of registration and so on, and then accuracy. B, check, double check, triple check. If you're not the whiz kid with the math, get your daughter who's the mathematical genius in high school to check it for you.
So do you service clients outside of the great state of Texas?
Oh, absolutely. We're nationwide. I think we're in 47 or 48 states currently.
Excellent.
I don't think we have a customer in Montana and one other state. So at the moment, but we have clients in Hawaii, New York, Florida, Illinois, you name it.
I know a guy in Montana. I'll give him a call.
Absolutely. We'd love to include him.
So you kind of touched on a little bit what a new business. Well, now we're talking about new businesses. So what is this? Startups? What do they need to do to be tax compliant?
Well, first thing you do as a startup is you have to pick the entity that you want to be: corporation, LLC, partnership, sole proprietor, and each one has different taxing aspects, and some are more advantageous than others, and it may depend on who you're in business with, where you're in business, and so on. But consult with an expert about what entity you want to be. The next thing is, do you have employees? And are you sure they're employees? If you're a corporation and you work in that business, you're an employee. You've got to take W-2 compensation and withhold and pay taxes. You don't have a choice. And you don't get to choose your employees or independent contractors or employees. Like your friend, there's laws and they can be ambiguous at best. And since the most recent set of rules was revoked, we're back to where we were, and it's quite amorphous and quite ambiguous. And there's 20 common law rules, and it's a preponderance of those. And in the end, the people that choose what is the preponderance of evidence is the courts. So you may get into an argument with the IRS or the state. You may win, you may not. In the end, if you don't win, you can appeal to a court of competent jurisdiction and get them to rule on it and get another bite at the apple. It can be expensive, but in some cases worthwhile. But misclassification, 70% of U.S. businesses misclassify employees, either employee versus independent contractor, or subject to overtime and not subject to overtime. U.S. Labor Department says 70% of all businesses. And the penalties and interest on that can be overwhelming. So you've got to know if you have employees, if they're employees. Those are two of the major areas, what you want to, your entity type and classification, that trip up startups and new businesses. Then on top of that, as we were talking about, you got to know what you need to do. You got to know you have to register with the state for unemployment and revenue in most states. You've got to make those deposits, those payments, those forms. You got to file them with the IRS, with the state, in many cases with a local entity. And if you don't, they're not very forgiving, I promise you.
So I have a question, because years ago I worked at was affectionately called the Big Yellow Box, which is the big Kodak factory in Rochester, New York. 55,000, 60,000 people, even more than what Google has back in the day. But they were registered as either C Corp, S Corp in Delaware. And so there are a handful of states where Wyoming, Nevada, and some other places. What's the significance of that? And do you ever? I know you're not an attorney, but you play one on TV probably. So, so what do you recommend in terms of structure?
Okay. If you're a major corporation, there are advantages to being in Delaware, okay, or Nevada. Those are the two considered the two best incorporating states. Frankly, for a small business, it's not worth the effort, the trouble, the cost, because you still have to comply with all the rules in the state that you operate in. So if you're in Texas and you incorporate in Delaware, you still have to file Texas franchise tax. You have to file Texas forms. You have to comply with all the Texas laws. So now you're complying with all the Texas rules and the Delaware rules. There are some advantages for major corporations to be in Delaware or Nevada, no argument. And once you get to a couple $100 million, you may want to reincorporate, okay? Or do a reverse merger or a number of other things. But for the startup, for the small business, just incorporate in the state you're in and live with it. I mean, California, the rules are onerous, but if you incorporate in Delaware, you still have to comply with all the rules in California and all the filings, and then you got to do them in Delaware too.
Yeah.
It's not worth it for a small business.
So what are PEOs and why do they suck?
Well, PEOs are professional employee organizations. They are what used to be called staff leasing. And staff leasing was created to skirt the tax laws illegally. And a number of people in the staff leasing industry in the beginning went to jail over it because they were tax cheats. It was a way for companies to legally cheat on their taxes. Well, it wasn't legal, and people got in a lot of trouble for it. The PEO promises all kinds of benefits. They're going to do what a payroll company does. They're going to pay all your taxes and so on. And then they say they're going to handle your HR, and they'll provide you group insurance and workers' comp. Well, in the beginning, there was some benefit to that. The insurance companies caught on. The workers' comp companies now do individual underwriting. You don't get the advantage of going with a group. They're going to look at you specifically, and if you're a bad risk, they're going to charge you accordingly. Now, there is some advantage in having large numbers to buy group insurance. No argument. You know, Hartford would rather deal with a case for 100,000 lives rather than 10. Just numbers. But in a PEO, you're going to get what they offer, which is normally a Cadillac at a high price. If you want a Ford or a Chevy for you and your employees, you can't get it from your PEO. You only get what they have. You don't get to choose. They give it to you and you pay for it. Then on top of that, you pay a substantial fee for all this management. And it's substantial, and they will hide it in the bill, and it will be very hard to see. I have never seen a PEO that I can't come in and provide payroll and insurance and workers' comp through my partners and save them at least $1,000 per head per year. We had a major client. It was a doctor's group, and one of the doctor's golfing buddies was the PEO salesman. And it convinced the doctor they ought to look at this. So they came in, and I got with the administrator, and we did up the whole thing. And they had about 150 people. And the cost to be in the PEO was going to be $300,000 a year more. The doctor
Ouch.
found it. Yeah. The doctor found a new golfing buddy.
Yeah, no kidding.
So it's very expensive, and it's there's only one case that I see that it's worthwhile, and that is if you have an absolute uninsurable risk. I had a client whose national sales manager was terminally ill with cancer, and they went with a PEO because they would insure him because of that situation, and they paid a whole lot of money for that privilege. It would have been cheaper for them to self-insure, frankly.
Yeah, absolutely. I totally get that. I come out of the life and health employee benefits business, so I totally understand exactly what you're talking about. And yeah, that's what they do, don't they?
Yep, that's what they do. Now, the PEO people don't like me because I write about it and so on, but they can't argue with me. They can criticize me, but they can't really argue.
Right. Sure. So we're boy, this half hour has gone really fast. I know we have a couple more questions, but let's talk about your book. And you wanted to share the book, and I think you are thinking about doing something very special today. Today only before midnight tonight. You also get the Ginsu knives. No, that's it. Oh no, that's the other podcast. Sorry, but so you want to. You have an offer for our listeners and viewers today, whether they see this on YouTube, Vimeo, LinkedIn, or my podcast channel. The Payroll Book. Tell us about it.
The Payroll Book, a guide for small businesses and startups, designed for businesses under 50 employees. Okay.
Oh, okay.
It's really not designed. If you're IBM, you've got somebody that could write this, hopefully. But this is 30 years of experience distilled down to 95,000 words. But if any of your listeners would like a copy of this, if they'll go to the payrollbook.com, which is the website for the book, and in the discount code, enter Dave, we'll send them a free book.
Wow. Thank you so much. That is awesome.
A gift to your listeners.
That's wonderful. Yeah, as you well know, probably well over 99% of all businesses functioning in America are under 50 employees, if not less.
Absolutely.
So go to the payrollbook.com and put in the discount code Dave, which has something to do with moi, apparently. So, but I'm talking with Charles Reed, and this has been a wonderful conversation. Man, there's so much stuff going on. It's like the old Ed Sullivan shows, the spinning plates. If you're old enough to remember that stuff,
I do.
The plates are spinning nonstop right now in Washington and elsewhere. So hang on to your hat, and you need to talk to Charles. Connect with Charles. I highly recommend. He knows what he's talking about. He has the experience, and he can tell you the answers. You know, it is well worth it. I don't care how much you charge. It doesn't even matter, because it's why, it's well worth it. Just say that. You want to save money, not lose money at the same time. I think it's a good call to talk with Charles Reed. So, Charles, anything else you'd like to say before we wrap things up here?
No, that's good, Dave. I've enjoyed being with you today. And if they want to contact me, they can reach me at cjr@getpayroll.com. It's right here on the back. That's my email. And if they've got a quick question, 972-353-0000. They can call me. Ask for Charles.
Got it. Charles, it's been a pleasure and very enlightening for sure. And thank you for under the circumstances, explaining a lot of this stuff that I'm sure is going to be helpful, timely, very timely for sure. Thank you again for being here.
My pleasure.
I'm Dave Henning with the Fresh Start Podcast, fresh ideas for business and personal growth. Thanks a lot, everybody. Have a great day.